Hello, this is Manash Patel from IMTF Trade. Today is September 18, 2018. We're going to give you a quick market update today. Reason why is the last market update, it was doing really good. And we kind of want to follow through and talk about where the markets, U.S. markets are going and where they're at right now. As you know, we pretty much start off with the E-mini S&P 500 futures, which is it right here. And you could see that on a weekly time frame right now, we're still slowly progressing up. We're holding our support here. We'll modify the supports based on the lower time frame in just a moment. But you could see that we're slowly progressing up to this level here. Since we're at all-time high, the only thing we can do is use Fibonacci extensions since there's no past support resistances at all. So that's the weekly time frame. Let's go to the daily. If you look here on the daily time frame, you can see we kind of popped out of this resistance here. We popped up there, kind of held the support. There's a minor support in here, and you could see from the crosses and the dots here, and then we're kind of up here. So we retested a high here like a couple of days ago, 3 days ago specifically, and then we're still slowly progressing up. There's a minor support here at this red line, but the major one here is around 2860. Let's go down one more time frame lower to kind of get an idea of what the swing traders are doing, and then we could complete the E-mini. Here's the 240 minute, which pretty much represents the swing traders here. You could see here it tried to go bearish here, didn't succeed. It kind of here went bullish, but just to retest the high, and we really haven't done anything. So we kind of got a consolidation pattern range right now, and we're going to modify this support right there to about right there. Because you could see that's what started the bullish trend here, kind of held up here. So this is the modified support right there, which is at 2866. That's critical in order for us to maintain that bullish trend. As long as we sit there and hold that support there, we still have a high probability to get that resistance before the end of the year. And remember, we say that's before the end of the year because we're looking at the weekly time frame is where we did the Fibonacci extensions. Now let's go to the VIX, which has been more of an accurate predictor with the market's forecasting compared to the S&P. Here's the daily time frame for the VIX. Remember, the VIX is an inverse relationship with the stock market. So if the VIX is going down, the markets go up. VIX goes up, the markets go down. And you could see here that, and we specified this in the last video, we've entered a range here. And if you look at the resistance is pretty much here, roughly around, we got two levels here for some reason. Let's delete one of them. Okay, roughly around 1539 is the resistance there. This support is around 1208. In the middle of the range, which is a resistance there or support depending on where you're looking at, is around 1352. And basically what we're looking at is price to pretty much consolidate in this range until it sits and closes outside that range to basically confirm it. And you could see when we put out the video, we had talked about this here, resistance here. So the markets were going down until we got that resistance here. When we got to that resistance here, we're predicting it to kind of bounce off that level and to start to go down. The VIX goes down. If VIX goes down, the markets go up. So what we looked at is when we got this resistance on the VIX there, we started looking for a lot of bullish trades to break out on the S&P 500, Nasdaq, and the Dow. And which one always, Nasdaq's been leading, so we looked there first, then we looked at the Russell and so forth. But this is the boundary condition here where the markets had a possibility of changing. So if you just give you an example, if you go to a 60-minute time frame, you get a lot of bullish and bearish 60-minute trades right at this date and time. At that point, you look to see which one's going to break out. We had a lot of bullish trades break out at this point here compared to bearish, so we knew that the markets at that point were going to have a high probability going up, which means the VIX going down, and that's kind of what we did there. So we basically went bullish here on a lot of 60-minute breakouts there, or 120 or 240, depending on what swing trading. And you can also look at daily too, since this is up there. And then we pretty much traded all the way down here to this support here. When we got to that support, that told us pretty much the markets could sit there and break the support and keep on going higher, or it could sit there and hold the support and go up. So when we got to this point right here, we pretty much started taking a lot of our bullish positions off, taking the profits off a lot of them, or tightening up our stop. And it was a good thing because we kind of held that support here, and you could see we bounced off there and came back up. Okay, now we're kind of at a critical point. We're in the middle of the consolidation pattern here. You could see yesterday we closed above that level here, but you could kind of see this is the major support slash resistance here. So we kind of could see what's going on here. So again, here we came yesterday before the markets closed. We looked at a lot of 60-minute trades, and today we're going to see exactly what happens with them today. And if the bullish trades break out, then we know that we're going to come back to the support here. And since we never came back to that resistance here, and we're going to come back to the support, we've got a high probability of possibly breaking that and to keep on going lower. If we got a lot of bearish trades that break out, then that means basically we're going to go up to this resistance here. So that's kind of how we're playing it here. And you could see this has been an accurate predictor of the market so far. We don't always get complacent and think that this is going to be the answer for everything. This is one of the reasons why we look at all the indexes and so forth, and then we kind of see exactly which one's leading right now in forecasting. Here's a quick snapshot of the Nasdaq. You could see on the weekly time frame, you could see here it's still bullish here. It's holding the support around 74.33.25, which kind of yesterday we kind of came down, bounced off it and held it. As long as we hold that, we still have a chance for the markets to go up. Here's the Russell Futures. Here you could see the same thing as the Nasdaq. Held this support here at 16.99. So as long as we hold that, we still have a possibility to retest the high and keep on going higher. Here's Dow Futures, and this is the one that was lagging. So this is the interesting one, because normally the Russell was being lagging, but that kind of caught up, and now what's happening is the Dow has been lagging. And you can see here we're still holding the support here, and we're slowly making our way to this resistance level here. So it's going to be interesting to see when we get to that resistance level there exactly where the other markets are going to be, especially the VIX, and then go from there. However, you could kind of see here yesterday the Nasdaq and the S&P and the Russell kind of went for a little pullback, whereas the Dow really didn't go that much of a pullback, which is kind of interesting to watch. So kind of right now we're watching the Dow, and then we're watching the Nasdaq. Those are two markets we're watching, along with the S&P and the VIX, of course. But we're kind of seeing exactly what happens with these relationships as they go forward with time, to go from there. If you guys have any questions, you're more than feel free to email us at info@eiicapital.com. Have a good day and good week trading.